Okay, so now the next thing we need to ask ourselves after we've gone through the process of applying our overhead, we now need to say, hey, did I do a good job or not? Okay, so I am going to, before we get into this page, I'm going to insert a thing and see if I just press play. Okay, so from Accounting 1310, do you guys remember what a T account is? A T account looks something like that, okay? And so what's going to happen is we are going to have a T account for all of our different things. We're going to have a T account for direct materials. We're going to have a T account for direct labor. We're going to have a T account for manufacturing overhead. And that's what this big T account over here is going to represent. All right. Now we'll have a T account for a bunch of different things that we're going to kind of talk about later, such as finished goods, work in process, direct materials, or raw materials, all of these different kinds of things. So when we apply manufacturing overhead, we are going to apply it as a credit. Okay, so you have to remember that over here I have my debits and over here I have my credits. So even though we aren't booking journal entries, we are going to talk about these things in terms of like T accounts, debits, and credits. All right. So again, when I am trying to increase, right, my manufacturing overhead, I apply it over here on the credit side. Now, what is going to happen is at the end of the period, right? That's kind of when that happens. And then at the end of the period or the project, this is when I'm going to come and I'm going to hit with all of my actuals on my manufacturing overhead. So when I know what I actually spent. So this might be my indirect materials. Maybe I have indirect labor. I'm going to have, salaries for, my supervisor, so on and so forth, right? I'm going to have all of these actual manufacturing overhead expenses. So at the end, remember what we can do is we can add them all together. So I'm going to get a total of my actual, and I'm going to get a total of my applied. And now what I have to ask myself is, how good of a job did I do at estimating this? Right? Because that's exactly what this is. This is just an estimate. So did I do a good job? Because I know that I'm an accountant. I'm not a fortune teller, right? And that's totally fine because I know these two things are going to be different, right? But I'm trying to understand how different they are. So I have to think if my applied is greater than my actual, what does that tell me? That I estimated more than I spent. So that is going to say that I over applied something. Okay, think about that. I estimated or I applied more than I actually spent, so I over applied. But what if my applied is less than my actual? So I estimated less than I spent. Well, hey, I under budgeted or I under applied. Okay. So we just have to keep track of what did I think was going to happen versus what actually happened. And what did that tell me? How good of a job did I do? So with that in mind, say in an example case, we have our applied overhead at 60,000 bucks. Okay. So I estimated that I was going to incur $60,000 of overhead. But now I add up my indirect labor, my indirect materials, all of these salaries, my property taxes, my expenses, my depreciation. Oh my gosh, I actually had $63,000 in expenses. Okay. So I actually wrote a check for 60,000 bucks or 63,000 bucks, but I thought that it should only be 60. So what does that tell me? Well, that should tell me, right, that I didn't budget enough. I under budgeted. I under budgeted. And again, that's okay, right? I under budgeted, I under applied. That's okay. It just means that I spent more than I should have, right? And before I guess I jump and say that it's okay, I probably need to understand why, and I probably need to ask some questions. Okay. Now, what happened, right? Or what would happen if, say, over here, I have actual, and I'm not going to do, a bunch of different things here, but say I had actual of 58,000 and I estimated or I applied 60. Well, what that would mean, right, is that I over applied. I was over budget, and that's fine. Again, I just have to ask why, but I was over by 2,000 bucks. Okay. So you practice this and see what you can find out, because Burnett estimated manufacturing overhead at 522 based on 120 direct labor hours in 2024. During 2024, I had actual manufacturing overhead of 553 and actual direct labor hours of 122,500. So what was my over or under applied manufacturing overhead at the end of 2024? Well, step one in my total process is understanding what is my allocation base. And this tells me that my allocation base is direct labor hours. Step two is to calculate my predetermined overhead rate. Okay, so how much is my predetermined overhead rate? What's it based off of? Exclusively estimates. So I estimated 522 based on an estimate of 120,000 direct labor hours. So I got a predetermined overhead rate of $4.35. Okay. Now, step three in this process of applying overhead is to actually apply it. So what do I do here? I take my predetermined overhead rate and I multiply it by what? Actual direct labor hours incurred, my actual cost driver. So I have 122,500. So I apply overhead equal to what? Well, if you do the math, it should give you 520 or 532, 875. Okay. Well, what the heck do I do with that? Well, I'm going to think about it in terms of a T account. I'm going to have my manufacturing overhead, and I'm going to say that I applied 532, 875. Do I apply on the debit or the credit side? Well, I apply on the credit side, so I have 532, 875. What's my actual overhead? 553. Okay, totally, well, I shouldn't say totally fine, right? But what's the difference here? Am I over or under applied? Well, what I need to say is take the difference of the two, right? So I'm going to say that I applied 532, 875, but I actually incurred 553. Hopefully, based on my tone of voice, you can tell that I was like, hey, I estimated less than what I actually incurred. So the difference here is 20,125. So I can get rid of those ones. And now again, I just have to ask myself, where am I over or under applied? Well, I under budgeted. I'm under applied here because I estimated, right, less than what I actually worked or what I actually incurred. Okay. So we definitely got to know how to do this process. So here's kind of, a flow chart of what we've been talking about, where we have product versus period costs. Oh my gosh, excuse me. I haven't been feeling well, which is always kind of a bummer. So I'm sorry that I'm literally coughing in the back of all of these background or in these videos. It's probably kind of annoying. I do apologize. But this is kind of just a review from chapter 1, where we have our DM, DLOH, and then we have our selling, general, and administrative expenses over here. And we were like, okay, hey, I know, based on me killing it in accounting 1310, that all of my inventory costs, right? All of my inventory shows up on my balance sheet. And I have different stages of completion. So when we think about the Toll Brothers over here, they have raw materials, which is just my plywood and my sheet metal that's just sitting there ready to go. Then as soon as I start hammering that, right, as soon as I start placing screws into that plywood As soon as I start welding that metal, well, then all of a sudden I've started working on it. It becomes work in process. And that's going to be work in process all the way until it is 100% complete. And once it hits that threshold of being 100% complete, it sits in my finished goods inventory. And it'll sit in my finished goods inventory until I sell it. Okay? So then when I sell it, that's when I recognize my cost of goods sold. And I recognize my cost of goods sold on my income statement. Now, just as a quick reminder, all of these SG&A expenses, they never become assets to me, right? I just expense them when I incur them. I have my depreciation, I have my salary expenses, all of that stuff. I match that in the period in which I incur it and just throw that to my income statement immediately. So if you think about how that kind of generally happens, we have to think about how we record the flow of costs in my job order costing. So I have all of my raw materials, okay? And I go out and I requisition them. So I am the Toll Brothers, I have my job 27, and I'm going through and I'm like, hey, I actually need all of these sheet metals. And then I start placing it into the materials or into the actual like structure of the house that I'm building. Then at one point, that job, right, that house is going to be 100% completed, okay? But before that happens, I have other things going into my work in process. Sure, I have my sheet metal, but I also have all of my laborers' time. Remember when I went through my time ticket? And then what also, what also hits is my manufacturing overhead. And remember, I went through the process of saying, hey, I have my applied, I have my actual, and I apply, right, my manufacturing overhead, this applied, oh my God. This applied is what shows up over here on my work in process inventory, okay? So once I hit my DM or my raw materials, my direct labor, and my manufacturing overhead in my work in process, once that's all 100% complete and that house is finished, it sits in my finished goods inventory. Then once that house is sold, okay, that's when I recognize my cost of goods sold here. Now, the only other thing that I do want to consider is we know that my over and under applied overhead is kind of hanging out there. We haven't talked about what to do with it yet. All I know is that I, am not a fortune teller. I don't know exactly what's going to happen. Okay, so I misestimated and that's fine, but it's kind of hanging out there. Okay, so the last piece of this is to close my over or under applied into my cost of goods sold. So we'll see that in the future, okay? Because remember, my applied overhead is what goes into my WIP, but I do have to take care of the difference between my applied and my actual in my cost of goods sold. So last thing over here is just a quick reminder. I know we've kind of been talking about this, but we don't book the journal entries, but just kind of like remember when you're thinking about T accounts, you have debits on the left, you have credits on the right, okay? And you also have to think about how certain accounts increase or decrease. So my assets, my expenses, and I'm trying to think of if there's any other big ones for principles of accounting too. I mean, you have like your dividends, but we don't worry about that in this class. Then you have normal balances that increase with credits. Well, that's going to be all of my liabilities. It's going to be my revenues, and just general equity items, okay? So if we come back over here and we think about this, well, what are my raw materials, my work in process, and my finished goods? Those are all inventory items. Those are all assets. So we increase these balances with credit or with debits to increase them, okay? How do I increase my cost of goods sold? With a debit, all right? So just kind of keep that in mind as we go through this process. So the next video is going to walk us through a big example of this. So let me know if you guys have any questions. Otherwise, I will see you for the last part of this chapter.